In today's video, I'm going to show you that one simple tax strategy that's hiding right in front of your face that can save you thousands of dollars each and every year. Or like this client who saved $5,000 by doing one simple thing that included keeping their behavior exactly the same. Now, before going into exactly what this client did to save $5,000 on their taxes, if you want us to do this for you, click the link in the description of this video, book a call with us, and we'll help take care of this for you and help you save a ton in taxes. So what exactly is that strategy? It's what's called the PTET, or Pass-Through Entity Tax Election. You see, most people think that the tax code it's there to make sure that you pay the most amount of taxes possible, but that couldn't be further from the truth. Using the tax code as a roadmap or guide to pay less in taxes, it's completely 100% legal. And not only is it legal, it's what we help you and other clients do each and every year. So why don't people just do it themselves? Because the tax code, it is inherently confusing and really hard to navigate if you are not a CPA like me or any of my other colleagues. My name is JT Pells, and I've been a CPA for the last decade. During that time, I've helped business owners, just like yourself who is watching this video, save thousands of dollars in taxes each and every year. So let's go ahead and jump into what exactly this pass-through entity tax election is all about. Business owner, they pay two taxes each and every year when they file their taxes in April. You pay your federal taxes and your state taxes. Both of those are inherently personal in nature. By both taxes being personal, you can't deduct them against one or the other. However, if you are a business owner, you can actually make an election on your state's tax return that says, instead of me paying my taxes personally, I want my business to pay my personal taxes. What this ends up doing is it makes those personal taxes a business expense and you are able to deduct them on your federal tax return. In 2017, President Trump passed what's called the Tax Cuts and Jobs Act. What that did, what is it inherently limited the amount of state taxes that you can deduct on your return. You see, you used to be able to deduct all the state tax that you paid personally. Now it's capped at $10,000, or this year it was $40,000. However, a lot of business owners can inherently blow past that. However, by making this one simple election, your business can now pay your personal taxes and get to take that deduction without any limits. Now, before everybody goes watching this video and asks their accountant about this, there really are two requirements that you have to take advantage of this. Number one, you have to be a business owner, or really two things. You have to be a business owner in a state that has income taxes, and your business has to be taxed as what's called an S corporation or a partnership. Unfortunately, C corporations do not count for this, so it's only those two types of entities. And the next thing you have to do, you have to really be paying a lot in state income taxes. If your state income tax bill is only $5,000, this strategy is not going to really move the needle. But if you are in a high tax state such as California, New York, Illinois, Iowa, any states like that, and your tax bill is $30,000, this is really going to move the needle. Now, you might be wondering why I love this tax strategy so much. The number one reason why I love this so much is that you are inherently keeping your behavior the same. You see, on social media, you see a lot of gurus and tax gurus, or some fake ones too, that say, go out and buy a car, go out and buy a rental property, pay your kids, put money into a retirement account. That's inherently changing your behavior, right? For example, somebody like me, I don't like buying new cars all the time. I like to keep the same car. If you ask me to go out and buy a car at the end of the year, that's inherently changing my behavior. I have to change my insurance, my registration. I have a car note. I don't want those things. I just want to keep things simple. With this, you have to pay your state taxes. There's no way around it. However, if you just pay it through your business and make the election on the tax return, you can now save thousands of dollars in taxes each and every year from doing something that you are already going to do. Technically, you could do this yourself. However, I don't recommend something like that. Every single state has different niches, different quirks about it. So I couldn't make a video going through all 35 states that have this election. You see, that's why you want to work with an accountant who can do this for you. Some states, such as California, require that you have to make your first payment in July. Or there are states like Iowa that says you just have to make the election before you file the tax return and pay the tax throughout the year. As you can see, both states have wildly different rules, so it makes sense to work with a professional to have them do this for you. And you could ask yourself, why don't I know about this? Why doesn't anybody talk about it? Well, I'll really tell you why. Number one, the IRS isn't going to advertise this. It's not that the IRS is trying to hide anything, they're just inherently inefficient. For those of you guys that have been to the DMV, you know what I'm talking about. The DMV is run or staffed by the exact same people who are working the IRS. Very lazy people who have no incentive to change their behavior. And honestly, a lot of accounts don't bring this up. The reason is that they have clients that are in all 50 states, and it's really hard to dive deep and look at certain states. So unless your CPA or accountant is really proactive, it's very hard to read about this or learn about this stuff. So now that we kind of understand the gist of how this works, let's work through an actual example and see how the numbers shake out themselves. Now, let's look at an actual example of how this would work and put some numbers behind it. I always like to use California in these examples because they tax you to death. They really shake you upside down and make sure they get all of the loose change out. But let's look at this example here. Let's assume that in this business owner, they made $400,000 in profit. That means that the person who owns that business 100%, they pay taxes on $400,000. Now in California, this will probably be in the 10% bracket, which means that you pay 10% taxes, right? That would mean that you owe $40,000 personally to the state of CA. Now, whenever you see about these tax strategies that you see on YouTube or social media, they're always talking about federal taxes. They very rarely talk about state tax deductions. And to be honest with you, most states do not have favorable tax deductions. The reason that is let's think about it. The US or the federal government has 330 million people. A state like Iowa, for example, has significantly less than that. So if 10% of the population of Iowa avoids their taxes legally, Iowa has a problem. If the US has that, not as big of a deal. Now, back to this example, right? So let's say this business is going to pay, or this business owner has to pay $40,000 in taxes, and they have to pay taxes on profit of $400,000 both to the state of California and to the IRS. Now, this person would probably be somewhere in, let's just call it the 30% bracket federally. So federal taxes on this, $400,000, probably somewhere in the 30% bracket. That would mean that they owe $120,000 federal taxes personally. But let's flip that a little bit, right? Let's say that you tell your accountant or whoever it is that you're working with that, hey, I want to make this election and I want my business to pay this, right? Now to California, you're still going to owe $40,000. However, let's do this now on the federal side with the PTET election, right? So instead of your taxes being $400,000, they would actually be $400,000 minus 40,000, which equals to, if my math is correct, $360,000. Now, in the 30% federal bracket, right, you would only pay taxes on $360,000, or that would be, if my math is correct, 360 or 30 times 3 is 900 plus 18, $108,000. Right? So just right here, you are going to pay that $40,000 no matter what you are going to do. However, by making this election, you went from paying $120,000 to $108,000, saved you $12,000. That is way better than going out and buying a car that you really didn't want in the first place, or putting money into a retirement account that you can't touch for the next 35 years. Now, again, these aren't hypothetical. These are real deal math problems. And that's really why I like this strategy so much, is that you are inherently keeping things the same. It really just is an accounting election that your accountant makes come tax time, and then just telling you to pay the money from your business account instead of your personal account. That's really it. There's no car loan that you have to get. There's no rental property that you have to buy. This is literally just moving things from your left hand to your right hand and saving $12,000 in taxes in this example. So here's the bottom line. Most business owners and taxpayers, they are simply overpaying the IRS, not because they want to or that they're stupid, they just don't know and they're not working with an accountant that is proactively presenting these strategies to them. And that's the part that really drives me nuts. It's not so much that you're lazy, it's that you just don't know where to ask, and taxes are inherently confusing. That's why clients like working with us. Now, I'm like you, and I hate taxes just as much as the next person. However, they don't have to be overtly complicated. Sometimes it really just as easy as checking a box, working with a real accountant that's going to help you, and kicking your legs back and letting them do their work. So if you are a business owner that's paying tens of thousands of dollars in taxes and you're not sure if you're missing strategies like these, and trust me, there are other strategies, this is just one of the easiest ones that is slept on. You're most likely leaving thousands of dollars in taxes on the table each and every year. Now, if you want to make sure that you're not overpaying and paying the lowest amount possible, make sure to work with our team. We will sit down with you, look at your tax structure, look at your business structure, and make sure that you are optimized to pay the least amount of taxes possible. If that is, click that link, follow it, schedule a call with us, and we will make sure that you're paying the least amount of taxes possible. If that's you, I look forward to talking to you on our next call. Talk to you soon.